Good afternoon. I wanted to start by thanking everybody for spending a couple minutes during their lunch hour with us at Jacksonville Wealth Builders. I'm very excited to bring you this deal on Peter Pan and walk you through the numbers and some of the exciting features of this deal. I'd also, looking through the list of attendees right now, I know we've got a mixed bag. We've got a couple of our experienced, more inner circle investors on the call, along with some of our, more informational gatherers right now. So I'd like to just introduce the Jacksonville Wealth Builders program for just a minute. Welcome everybody, and tell you a little bit about us. The Jacksonville Wealth Builders program is designed to create a passive form of income for our investors. Real estate is typically thought of as a very active, hands-on investment tool, and what we've created is a forum to allow you to completely and passively invest in real estate, experience the great returns that it provides without having to participate in the actual day-to-day labor and challenges that it involves. So we have a team of 12 to 13 in-house teammates, depending on an intern, a seasonal intern, that are seasoned investors, and they're here to do everything on your property, from acquisitions all the way to property management, and your only roles and responsibilities are to communicate when necessary and to collect the cash flow checks from us on a monthly basis. So with that said, let's begin and delve into Peter Pan and let you know why we're so excited to bring this to you today. This is one of our, I like to use this testimonial. It's actually my first client with the Jacksonville Wealth Builders when we first set it up about a year ago. Amy and Matt Stanley, they're investing for their children's long-term financial gains. The goal is ultimately to have a college fund, and they looked into prepaid college in the state of Florida, and they thought that there was a better opportunity out there for them. So we started the conversation, and a couple months later, welcomed them to our inner circle, and they put a deal under contract, and things have been going very well for them. So it's a nice little testimonial to kick things off. All right, on to Peter Pan. Not Cinderella, not Tinkerbell, just Peter Pan on this one. As you can tell, these pictures were taken middle of renovation. The great thing about this property is it will be 100% renovated tomorrow. It is almost at its final leg. We have done the punch list and are just finishing up some small items. These pictures were taken last week, so as you can tell, there are still some items that have not been completed. You look at the picture on your left, the front shot, and obviously it doesn't have the most curb appeal as is. We're going to do a little sprucing of the landscaping and add some shutters to the house and make it a little bit more aesthetically appealing. Now, the wonderful thing, and we'll talk about this a little bit more in depth later, is that this house is actually already rented. Our property management team beat our renovation team on this one, which is always a nice problem to have. So this house is indeed already rented at $1,025. The tenant is moving in a week from tomorrow, March 11th. So when we look at this house, some of the things that you should be considering from a long-term buy and hold perspective are long-term maintenance concerns. Obviously, the one thing that's very nice about this house is that it does have vinyl siding. Vinyl siding is something that is easily cleaned. It's not something that has to be painted off often. It can be pressure cleaned for a couple $100 cost from time to time, rather than having to repaint the entire house. Another thing that's nice is obviously it has a fireplace inside. You know, a lot of rental properties for a long-term buy and hold do not. That will certainly assist in renting it out more often than not and keeping the house occupied, which obviously is your primary concern. It also has a large living area, and it has a split floor plan. Split floor plan is something that we polled our tenants in the past few weeks and asked them what was the one thing in all our properties that they heavily desired, and that was it. Ironically, it was split floor plan. Most parents want to have a little privacy from their children and sit on the other side of the house in their own space. So that's something that this house provides. Now, as we slide on to where this house is located in Jacksonville, I know we've got a couple of national investors on the call. It's located on the west side. It's in a little pocket called Cedar Hills. It's in an area of Cedar Hills. It's a nicer pocket of Cedar Hills. It's called fairy tale land, obviously, as you can imagine, based on the name. The area around there is a great mix of homeowners and tenants. So you've got a good mix in the respect that the houses, have a decent amount of value, and at the same time, the tenants want to live there. So it's easy to rent, and also you are able to attain higher rents there. A 4-bedroom is pretty much a lock to rent out for $975 to $1,000 there if properly renovated. So it is a middle to low income neighborhood. It is not a house or a neighborhood that most of our investors would want to live in, but that's perfectly okay. You're not investing to invest in a primary residence. You're investing for an investment property, and we're going to be very forthright in saying that. Your primary focus is you want something that will sustain long-term value, and also, more importantly, long-term occupancy at a high rental amount. And this property will certainly do that for you. So let's get into the numbers. That's what this call is all about. The purchase price that we are selling the house to one of our investors is $82,900. We've set the estimated after repair value, which is your market value of this house, at a little over $97,000. So if you were to acquire this house, you'd be walking into it with about $15,000 in upfront equity. That after repair value is set from sold comps in the past 3 months within a mile radius. And obviously there's a fairly wide range, and we want to make sure that we compare apples to apples. So it's retail sales in the past 3 months. We eliminate REOs and short sales because obviously those are distressed properties, and it's not fair to compare an apple to an orange. So that's how we assess our value. As you can tell, it's tax assessed for $110,000, which is good and bad news. The good news is it shows that the house is thought of very highly by the tax assessor, which means it's a good home. The bad news is that you're obviously paying the same millage rate whether or not that house is assessed for $110,000 or $80,000. So obviously, one thing that a couple of our investors do is they come August or September, they'll dispute the taxes, and they will try to get a lower tax assessed value, and in turn it'll increase their monthly cash flow. The $2,043 is the actual taxes that will be paid in 2011, straight off of the City of Jacksonville website. And one of the questions we get all the time from our investors is, it sounds too good to be true. You're going to do all the work. You're going to promise these high returns, this high cash flow amount on a monthly basis. What's the drawback? What's the risk? And obviously there is a risk. There's a difference between a sure thing and a calculated risk. And investing in real estate is the latter. It's a calculated risk. And that risk comes down to 2 words: maintenance and vacancy. Now obviously, as your property manager, our goals are aligned with yours. We're an entirely referral-based company. Most of our clients come from word of mouth, and it's imperative that you experience success with this investment so that you're willing to share that with your friends, your family members, and your colleagues, and allows our business to continue to grow and prosper. If your investment fails or it struggles, naturally it really is a detriment to our business. So our goals are automatically aligned with our investors, and that's really important, that we're working for the same goal, we're working for the same interests, and a lot of times you don't have that with other financial advisors that you might run into. So maintenance and vacancy are the 2 biggest risks. As you may have heard earlier, this house is already rented, but of course 6 months down the road there's always the chance that that tenant doesn't pay their rent, and we have to go through an eviction. It is an unfortunate thing from time to time that does happen. It is a very rare and not often scenario, but it is a risk of owning real estate. The other thing is maintenance, and we'll go through the renovation and some of the things that we've done on this house to make sure that the high cost items are taken care of up front. So on to the ways to purchase this house. The first way obviously is all cash. Some of our investors will buy it straight out of their checking or their savings account. Others will use a self-directed 401k or an IRA and enjoy the tax deference. This house, if you were to pay for it all cash, will produce a 10% cash-on-cash return, which is fantastic. That's net, of course, as you can see. The annual gross income is calculated by the $1,025 rent times 12, and it's less out of all of the costs on a monthly basis. to get your net income divided by your total initial investment. And as you can see, we also include closing costs of about 1% of the purchase price. Usually they range anywhere between about $500 and $1,200 to $1,300, so we split the difference, and that was our estimate. The second method, and this is one of the more common methods, particularly in today, it's a buyer's market. You want to leverage your credit, leverage your funds, and leverage your opportunity to acquire as many undervalued properties as possible as a 20% down purchase. Now this would be a conventional loan. You can only have up to 10 leveraged properties at any point in time right now with current regulations. So if you already have 10 mortgages out on 10 other homes, this would not be an option for you. But if you are less than 10, it certainly would be. Once you acquire your fourth property, your fifth property requires a 25% down commitment up front. So there are certain lender regulations. That's something that we take care of you. Obviously, that's one of our jobs. We're constantly interviewing the best brokers in town, the best brokers nationally. We currently work with a great broker out of San Antonio and another one out of Fairfax, Virginia, that are just incredible when it comes to investment products. So that's where we come in to help you out. A couple things just to point out: the financing closing costs, we budget 5%. They vary depending on the lender. Sometimes they're as low as 3.5%. Sometimes they're as high as 7%. But 5% is a very safe variable. The interest rate we estimate is a 6% interest rate. The last two loans that we closed last week were 5.5 and 5.625. Now we obviously want to under-promise and over-deliver, and there's two different areas where we can definitely do that. One is the interest rate. We're gonna commit a 6% or better at this current point in time, and we feel confident that we can do better. The other thing is the property management fee. At the very bottom, you'll see that we've taken out 10% of $1,025 of the costs per month. Our in-house with Progress Property Management is actually only 9%. So right there, you save a percent a month that goes straight to your cash flow. So we want to under-promise and over-deliver. So when we say 305 on this house, or 304.63 to be more exact, our goal is to do better than that. And the ways we can do that is through the interest rate and also through the monthly management fee. So this house, if you were to put 20% down on, you would yield a close to 18% cash-on-cash return. Now, most of our investors are savvy investors. They've looked at other options. They've considered the bonds market. They've considered mutual funds. They're probably active in stocks. There's not many options to consider 18% cash-on-cash returns. So that's why we're so passionate about what we do and certainly believe in our product, and have been fortunate to have several investors also believe in the opportunity in real estate currently. So let's visit the renovation. As I mentioned, it's going to be completed tomorrow. And as I mentioned, the primary goal during our renovation is to eliminate all high-cost repair items. You're making a long-term investment. You're going to be holding the property for a minimum of 5 to 10 years, and most of our investors much more than that. So we want to make sure that anything that we can address up front, we do, so that it's not something that comes out of your pocket after the fact. So looking at this house, I'm Peter Pan. It has a new roof. It has a new AC unit, and it has new appliances. And those are three very high-ticket items that you don't have to worry about in this house. A new roof can range anywhere between about $3,500 and $6,000, depending on the size of the roof. That's a huge commitment, and that's certainly going to adjust your return numbers and also your cash flow numbers. And we don't want you to have to do that. So what we've done is we've made sure that it has a new roof, and you've got at least 20, 25 years of life on this. A new AC unit usually runs anywhere between $3,000 and $3,500. That's a tremendous expense that completely changes the landscape of the investment. So we put a new AC unit, both condenser and handler, in the property, 2011. And then the other thing is, with a rental, we want to make sure that it has new appliances, a new refrigerator, a new range. They come with a 1-year warranty, and they're new appliances, which is fantastic. It also allows us to ask for a little bit additional rent as well from our tenant, because the house is decked out with new, not only cosmetics, but structural feel. All right, and lastly, the last component and the most important one really comes down to the property management. And fortunately, we have an incredible property manager in Mike Stetson, who has about 7 or 8 sales members who do a fantastic job for him. And this house was sold based on a prospective tenant walking into 2 of our other homes, seeing consistency in our work, and enjoying the after model, and in turn was in the belief that this house would turn out just like the others, as it has and as it will, and signed a lease a week and a half before the house was ever finished in renovation, which is pretty fantastic. So the house is rented for $1,025. The lease runs from March 11th, which will be the move-in date, all the way to March 31st of 2012. So get a little over a year of guaranteed rent for all intents and purposes. And just for obviously spending some time during lunch and listening to me chat about the deal, I wanted to make sure that I called attention to a bonus that we're running on this house. You know, it's a perfect storm in the respect that the property is finishing renovation tomorrow. The tenant is moving in next Friday. And if you were an all-cash buyer and you purchase this home next Monday or Tuesday, you would receive your first cash flow check March 25th, which is fantastic. It's an immediate return. So what we're doing is, if you have interest in this house and you've already been qualified to purchase with us, feel free to get in touch with us. And we're offering 3 free months of property management on this home. So that 9% monthly fee that our property manager charges, he's going to waive if you put this house under contract by Monday, March 7th, which is this coming Monday. One other thing I wanted to point out is we are a referral-based company. So one of the referral bonuses that we have, obviously, if you're not motivated to buy, but you're just interested in what we're doing, if you're not in a position to buy, but you're impressed with the product and the team, you know, we offer a referral bonus to anyone who sends us a phone number, an email, and a name of someone who ends up being qualified to invest with us. And it's $1,000. So the second that someone becomes qualified to invest with us, we pay you $1,000 right then and there. We'll cut you a check, whether or not you're an investor or just a spectator. Either way, you know, one of the things I'd like to offer as well is currently I've got 2 of our teammates in the office that are conducting strategy sessions. You know, if you have some time and you're interested in talking to one of us and talking about opportunities, we have 2 incredible teammates, Paulo and Terrence, who are able to chat with you for about a half hour, put together a financial profile, and have a little strategy session on ways that you can invest. So it's an incredible opportunity at your hands. I'm excited about Peter Pan. I think it's a wonderful deal. It's always nice when it's rented out in advance of the renovation being completed. It's more of a sure thing, if you will. And I certainly appreciate you taking some time this afternoon. We are going to be holding a weekly webinar at this time. It'll be about 10 to 15 minutes. Next Thursday at 12:30, I will be having a question and answer session with our property manager, Mike Stetson, going over some of the more commonly asked questions about property management. We'll go through the Section 8 program and some of the other challenges of his job, which is exactly the point of his job, to make your job easier as an investor. So look forward to seeing you next week. If you have any questions, feel free to contact us. The number is there. The website is www.jacksonvillewealthbuilders.com. You can sign up for a strategy session online or feel free to call us. So thank you again, and we'll see you soon.